This tutorial is on Unit 4 of the module Cost and Management Accounting. I have compiled some notes and examples for you to follow along with this tutorial, looking at something called process costing. This is a different approach to costing from the ones we looked at before, absorption and activity-based costing. There, we were trying to determine the cost card, finding the cost per unit of a product that is produced, a full product, a complete product. If I make this, if I make those, how much does each dough cost to produce? Process costing takes a solely different approach. It relates to things in a series, in the production line, things that involves different stages. For instance, in a car manufacturer, the manufacturer is producing thousands and thousands of cars. But they do it going through several processes. You might have one process where they build the shape of the car. And once they build the shape of the car, maybe it goes to another department where they put the wheels on the body of the car. They put the wheels. Okay, maybe it goes to another department also. Once they put the wheels, it goes to another department also where they do the painting. Okay, so here they do the painting. So there is a production line where each department is doing a different thing, and gradually the car becomes towards a more and more of a finished car. When you go back to this situation, lots of processes are taking place. So you have different processes taking place, but there are two things involved. One is that you want to build up the cost of a finished car. And obviously, ultimately, you would want to know how much the whole thing costs, how much the whole car costs. But also, you are going to have inventory. You are going to have stocks. At each stage, at the end of the month, you will have some cars which are just at the body stage, just at the body stage. Then the month ends, and equally, you may have some cars which have the body and they have the wheels, but they are not painted. So they are just at the stage, the wheel stage. They have the wheels, but they are not painted at the next month end, and they will be painted in the next month. So it is very useful to be able to know the cost at each stage. How much does the car cost when it only has the body? How much does the car cost when it has wheels? It will be a move, or it will be an obvious move that it will go to the painting stage. Then how much does it actually cost when it has been painted? Okay, with process costing, we are going to find the cost at each stage. And before we go in further, let's look at example one, which totally talks about the full costing method, the absorption costing method. So that as we look at the next example, we should be able to differentiate between the two costing methods. The process costing, where we cost at each stage, we find the value of the units, the inventory at each stage. In this example, we are given that during February, the following costs were incurred in a process. So there was a process: materials $20,000, labor $10,000, overheads $8,000. Then 2,000 units were produced. Calculate the cost per unit. Traditionally, we will have to add the total costs, and then we divide by the number of units produced, then we'll have the cost per unit. So here the assumption is that all the units were produced. There was no problem in the process. So we have materials, 20,000, then labor, we have 10,000, and overheads, we have 8,000. Then the total, when you add this, we have 38,000. Okay, so the number of units produced, we are given 2,000 units were produced, and therefore the cost per unit will be 38,000 divided by 2,000. Okay, this gives us $19 per unit. Okay, so that is a simple way of going about it, but let's look at example 2, which gives us a more preventive way when it comes to process costing. In process costing, you'll be required to use T accounts. I'm not going to draw much on the debit and credit entries of T accounts because that is in financial accounting. Here, we'll just use the basics. So you'll be required to use T accounts to show both sides, the input and the output, because each stage has got an input and an output. So here, the process account, the process T account will be required in the exam. You are required to show the process T account. The debit or the process account will have the cost that has been incurred. Then the credit side, the right-hand side, will have the unit cost that you've previously calculated. Okay, so let's do it, which is in example 2. Prepare a process account for the information in example 1. So you have to show the units that are coming in and the value. In this case, we are given the dollars. Then you also show the units that are going out, the output, and also the value in dollar terms in this case. Okay, so the input we have materials. So we put the input costs, materials, and the value is 20,000. Okay, then in terms of units, let's assume that it's 2,000 units of materials. Let's say 2,000 kgs of maybe steel. We don't know the material that is given, that is being used, but it's important to show the units. Then in terms of labor, the value of labor, the cost is 10,000, and overheads, it's 8,000. So these are the input costs. Then we get the total, it's 8,000. Okay, and the total units is 2,000. So we are inputting this, and what will be the output will come to the credit side, the right-hand side. So this is the debit side, and this is the credit side of the process T account. So in terms of output, here there is no loss. We assume that there is no loss in the process. So what is the input is also going to be the output. So we are inputting 2,000 units. then the output will be 2000. Okay, now at what value? We have calculated in the previous example, example 1, we said each unit will cost $19. So these 2000 units will be valued at $19, and the output cost, or the value of the output, is 38,000. We multiply 19 by 2000, we get 38. So this, we can have 38,000 as our total cost of output. And then we also have 2000 units in total as our output. Okay, this is just an introduction area. When you look at the notes, there are 3 problems. When you look at the notes, you will find 3 problem areas, and I will deal with them in the following videos. But watch this. In this case, we are working with 2000 units. Now, suppose something went wrong and 100 of them disappears, or were damaged, and we have to throw them away. Well, that is a problem, meaning that what was inputted will be different from what is going to be the output. So there will be a shortage in the number of units that between what was brought in and what is going out. Well, that is a problem which we'll look at it in the later videos. Another problem is working in progress. Here, we were working with 2000 units, but suppose I told you that only 1900 were completed and 100 units were partly completed. So how do we value the 1900 units? And how do we value the remaining 100, the ones which are partly completed? It will be quite unfair to value the partly completed goods or units at the full cost of $19. So there's a way in which we can value the part finished units, and that means extra work for us, and we'll look at it in the later videos to come. Thirdly, joint products are also a problem. It's a situation where you have other products being produced in a process. And well, this, again, we are going to look at it in the later videos on how to go about. So this is just an introduction, but we will see in the later videos on how we can make it more demanding. Bye for now.